Good day. This is Stephen Ralston at Zacks Smallcap Research, and I'm here with John Borshoff, CEO of DYLLF. Hello, John. Thank you for giving us the time for this CEO chat.
A pleasure to be here.
In the time we have together, I'd like to discuss DYLLF's most advanced uranium projects, Tumis and Mulo Rock, which currently has Tumis first, I'd like to address that one, which currently has a timetable for commencing production in late 2026. For our listeners, you have traveled this journey before as you and your team advanced Paladin to production in the 2003-2007 timeframe. And in the same jurisdiction, with very similar paleochannel deposits. Obviously, you are well up the learning curve in addressing the stages of development for Tumis. Could you compare and contrast the path here at Tumis with your experience at Paladin?
Yes, Stephen, I will do that. Before I do this, though, I just want to just give a little bit of background in terms of the how I've positioned DYLLF and the similarities of that to what I did in Paladin, and it has great bearing on the question you've asked. In Paladin, when I started to do a contrarian approach and developing a project pipeline at a time when uranium wasn't looking hot at all, by the time before the China phenomenon happened, I had two projects in the pipeline, greenfield, ready for development in Langer Heinrich and Kayalakera. And this sort of forward planning, where we weren't anticipating the timing of China when it would come in, but that just galvanized our positioning, and that we then flew like we did. We became an investment phenomena, and this was a result of that positioning where nobody else in the sector had done. So come forward now 15 years and look at where DYLLF is. Remarkably, we are in a similar position, this time on a contrarian approach, where I really thought the opportunity was that I believe that the sector is suffering from builders of uranium mines. And it's due to many reasons, which I won't go into here, but certainly Chernobyl and Fukushima had an impact on that, where expertise disappeared, and basically most companies and their projects went on standstill. So in getting DYLLF to where it is today, what we have got is two greenfield projects ready for development over the next 3 to 4 years in Tumis and Mulo Rock. But in parallel with that, one of the biggest sort of asset development part has been bringing my team from the core team from Paladin, which was the only company that had developed uranium mines, conventional uranium mines, over the previous 30 years, 25 years. And so the asset was, DYLLF asset above the ground, which is the team. We're familiar with it. It's not just geological, it's not just developmental, operational, it's governance, it's financing, and all of those key attributes needed for uranium mining are within DYLLF. So that's the number one that we have achieved quietly, with purpose, with vision. And when you look at the world today, I'm saying that there is a serious lack of greenfield projects ready for development with teams that can demonstrably develop, have credibility, and that's the point number one. So when that's one experience that I had Well, it's one of the things that I introduced into Deep Yellow that I have applied successfully. Had applied successfully with Paladin. So the current path then on sort of marrying, merging, getting a DFS, a very thorough DFS out in February 23. Then having the fortitude and the vision to actually recost that sort of 6 months later, which has proven to be a very, very good move. And the reason why that recosting is that the February 23 DFS had a lot of sort of headwinds of inflation, supply chain issues coming in, and even on our tendered, even though sort of 75% of the DFS was on tenders, not on just factoring and a little bit of tendering to get a bit of a shape to it. They had those headwind sort of extra costs in there, and we put them in the DFS, and because our purpose was not just to put a showpiece for the shareholders, but what we put on the table is something that we knew we had to honour and develop, because our game is becoming a major producer in the sector. So we to then sort of eliminate any doubt on the DFS, we spent a considerable amount of money in conjunction with the project engineer and our team, which provides all the process IPs and everything, and looked at the CapEx, OpEx, and recosted it, re-looked at it as an addendum to the DFS, signed off by the project engineer, which is fully auditable, and in that way, what happened was we reduced the CapEx by a little bit, $20 million US. That's fine, and the OpEx came slightly higher, nothing that would change things. But in that higher, it meant that it absorbed a 12% increase in fuel costs, 10% increase in power. So in actual fact, our old DFS, the OpEx was about right, and we eliminated that sort of that concern or doubt that a financier might look at and say, oh, yes, but this is what they were talking about, and now coming in. That sort of caution, if you like, is probably an experience we've learnt from the Langer experience. We understand more how the financiers think. These financiers have been involved with us previously, so we have a record of honouring, delivering, and doing where we're sort of going. The bigger emphasis we've placed as well is in the tendering of the EPCM contract, and really trying to get the best out of that, and assuring that we need an EPCM contractor that is able and capable of delivering on schedule, on price, and on cost, something that we look at for production in 2026. So a lot of effort into that. We've selected our detailed engineer, or the engineer that's going to do the detailed engineering and the EPCM, and we've announced that, and now we're sort of looking at what they call the SP1 component, which is the feed or detailed engineering, and the SP2 component, which is the execution, the actual construction side. That's on the way. We're focusing a lot more on the organic structure of how this will be managed from our side, from our owners team, so that we don't miss out that where the engineer thinks he's at and where we know it's at, there's not this sort of gap that all of a sudden we have to announce midway on. There's another $50 million there that was there, not due to that, but just what was done on the ground to what was done in the documentation side. The advancing our financing has been also much more. I mean, it's the same people that I've got from Paladin into my group, and we're about to announce a mandate with a bank, and that's proceeding well. One of the things that we'll be doing is looking at really what sort of gearing we want to accept against the cost of equity, and because for me the big issue is preserving the upside of any offtake agreements we have, and to make it such that the shareholder gets maximum benefit. So I guess they're the sort of differences. We've got a much more polished owners team. It's an owners team. What's that? The owners team is part of that is what it does through the sort of co-management in terms of the design that will be then signed off, and then the development of the operational people that are in that group that are going to be introduced and will be then retained by the project as part of the operational team, the core part. So I hope that answered your question there.
Yes, and thank you for those insights on the Tumis project.
Yeah.
We can now move to the Mulo Rock project. Earlier this year, DYLLF released an updated MRE on 2 deposits that are at Mulo Rock, and for the first time, it included estimates of critical minerals, namely copper, nickel, cobalt, zinc, and rare earths. This increase was significant. It increased the estimate by 85%. I understand we should expect a revised DFS that will optimize the mining method for the recovery of these critical minerals. What else is being planned to contribute to this revised DFS, which we expect in a little over a year from now? Right.
So, first of all, as you're aware, when we did the due diligence on Vimy, who were the owners of Mulo Rock, we saw upside, which we believed wasn't incorporated in that old DFS. It's a 2018 DFS, and which is the core technical document, and then there was a sort of a more promotional refresh DFS, which really didn't have any authority at all. So in that, because of the sort of nature of uranium in that sort of 2010 or 2011 post Fukushima to 2018 to 2022, the parameters on which the DFS was based by Vimy were completely different than what was existing in 2022, 23. A case in point is that at that time, the sort of critical minerals or the battery mineral weren't even talked about, and rare earths weren't even a big deal. So Vimy only incorporated a little bit of base metal work, which was going to be subject to their follow-on bankable feasibility study, as they called it, and it was essentially more on environmental concerns, getting the easily leachable base metals out of the system so that they would not have any issue in the tailings dam. So it comes to our sort of analysis, and we saw this absolute upside, and both in terms of interpreting the ore body, looking at the and by the way, Vimy had done a huge amount of drilling, a huge amount of test work. So in that side, the integrity wasn't sort of doubted, just how that was utilised. We saw upside in the uranium. First of all, it was always and always will be a standalone uranium project, and we looked then at value adding through the critical minerals and the rare earths, and our preliminary estimates showed a huge upside. Once the merger happened, we verified that, and we saw with a different approach to mining the ore body, that we changed the whole caliber, or potentially had the chance to change the whole caliber of this project, both in life, in value, and so in the period since August 2022 to now, and also some ongoing work, there are 4 components that will contribute to a revised DFS. First of all, it was the mineral resource estimates, which you mentioned that we did, and that came out very favourable. That was following, by the way, about 600 to 700 holes that we drilled, infilling in this ore body, which is 15 kilometres long. So we could get an indicated and sort of more measured resource, which would be the basis of the reserve determinations. And that gave really good results. In parallel with that, the other component was to look at the leach kinetics of the non-uranium minerals, because the uranium was well sort of established in terms of recovery, and that work determined some very positive results where we could expect to recover at least 70% on average over all those metals, and we could use then that as a basis for the revised DFS. The next component is just now going to be carried out, is some advanced resin resins that we have come to understand and appreciate, and it's been developed, which will then look at the process of extracting sequentially the uranium, the critical minerals, and the rare earths, and that work is about to start in the next quarter. It's a little pilot study, and once that's completed, we have the next component. It's sort of a DFS work, but at the moment we're keeping that in-house. And the third component is that because we're looking at the mining of more non-selective, basically we are approaching how the mining schedule will be working, and that way we can understand what new equipment we need, how we schedule, do we need beneficiation, or does it all go through the throat of the plant? Do we need a ROM pad to blend? All of those elements will be determined in this quite an intensive and extensive study that is now started. Once those 4 components are in, and of which 2 are in, and the other ones are coming, I guess the revised DFS proper will be started in the latter part of this year. It started now because it's all part of this whole thing, and we expect that that revised DFS will come out in the sort of early second half of next year. It will be a project that we anticipate will have a lot already. A life of mine looks like it's gone from 15 years to 23, 24 years, and it doesn't include a deposit called Mulo Rock West, which is the Emperor deposit there, and that Mulo Rock West would add another 10 years down the line. So we're looking at another long life mine. We have the approvals within that footprint that is approved environmentally that we can proceed. So that's the state of that. We're very pleased with how the results are proceeding, and we believe we've got a real sort of humdinger of a project that will be available for development in that 27 year for 28 for production late calendar year 28.
Thank you. Last and final question, and it's more of an investor's overview type question. We know the driver during the past uranium cycles has been the imbalance of supply and demand, which was exacerbated by the time and money it's required to bring new mines into production. But at the same time, there are a series of fundamental advancements in each particular uranium company that plays an important role. And as an investor, we have to look at both the company and the industry. Based on your experience, would you comment on the interplay between that macro environment of the supply shortage of uranium production with the dynamics of each, with a particular uranium company's stages of development?
Right. So basically, we have a situation in the macro, which, without going into the details, and as many commentators have spoken about this, that essentially there have been, excluding the uranium, the silent uranium boom, which was to do with armaments, weapons and everything in the 50s and late 40s, 50s. But after that, in terms of electrification and nuclear, we had the oil shock period where, there was this massive sort of, basically introduced nuclear into sort of reactors for electric production. And that phase died away when Chernobyl happened. Then the China phenomenon of the early this century, 2000 and sort of 4, 5, and the rejuvenation of the uranium, nuclear and uranium, very much driven by only one economy. And this current phase, which has really sort of expressed itself more clearly since about 2023 September, and I guess the pivot for that was the World Nuclear Association Symposium, which did a marketing study, which is proven to be out of date at the time, but it showed that there was a fundamental shortage of uranium in development, with an industry that it basically could not do anything for 12, 15 years. So now this boom since then has dramatically changed, where country after country have declared absolutely they need nuclear, that renewables are only part of the sort of strategy, and it's a top-down policy situation, similar to what the oil shock. So there's a completely different dynamic. Endorsement, the government's fearful for this energy transition, which few people understand, doing experimental stuff, which on industrial scale, renewables have never been done before. And it's a big goddamn risk that people are taking in terms of placing a new technology against, proven technology. So we now have the other aspect that wasn't existing before, whereas before there was only the vendors of the big reactors, and essentially a couple of private groups like Westinghouse and GE, and then with that the sort of licensing of the Korean, who build wonderful reactors and have proven to be how good they are in those 4 plants they built, all on budget, nearly on time, in the Emirates, and then the government ones in France and in China and in Russia, and as I say, those big units. Now what is happening is there's availability of another type of reactor that is a horses for courses, with which you've heard of these SMRs, these small modular reactors, and these are going to have an absolute impact, not replacing the big ones. We still need those, but gives optionality for which the industry's never had before. And on top of that, yet to come, is the sort of micro reactors which are going to come in at industrial corporate level, the sort of 25 megawatt, mining sites, whatever you want outside, that'll be, flowing in 6 years with refueling. So all of these aspects will then put pressure on more uranium being necessary and needed. And as these inventories are going, the feedstock for these will be from mine sites. And the amount of uranium needed from the current 150 million pounds mine production, with that 30 million of inventories, which are diminishing rapidly, if not nearly gone, that has got to go to 250 to 300 million pounds by the late 30s, early 40s per annum. And so the big part is that those companies and Deep Yellow is one of them. That's our vision. That's where we are looking of developing Deep Yellow, and positioning becomes important. Single mine operations are not going to be that important unless you have a next gen deposit, which is large, long life. But the others, you've got to have diversity. You've got to have geographic diversity for security of supply, and Deep Yellow has developed a pipeline that, you know, with a 7-year-old strategy, it still is relevant today in terms of where it's positioning. In terms of where a company goes then, in terms of those value upgrades, you know, yes, a DFS does something, financing, yes, does something. I think with the amount of new uranium needed, with the lack of greenfield projects available, our you know, and we've looked and valued, you know, where we are in terms of you know, of value at times our resource or our reserves, and looking at companies like Boss and Paladin and how their value has escalated. And we have in our mind the really quite major milestones that will revalue the company, and not just lifting the company on the tide of uranium prices, which you mentioned is rightly so, but we need to actually distance and get better value to our shareholders because of preparation, because of the team, because of our knowledge of what's out there and how we're going. So I think we're well placed. I think that we can't be too complacent about it, but I certainly think there are few thinking like Deep Yellow is in terms of what is necessary in the 30s of a supply company that is going to need to match a huge demand, and it's got to be different than the current sort of assembly of companies that are existing today. Over.
Well, thank you, John. And thanks for your time for participating in this CEO chat.
It's a pleasure, Stephen, and anytime, just give me a call.